So I think we've got a very good setup for this next section on fixed fiber and the future, because we've got a good mix of participants here. We have two big wholesale platforms, Clive Selly, the CEO of Openreach, and Greg Mesh, the CEO of Fibre. We have one of the largest customer bases, one of the largest buyers of wholesale in the market, in Amber Pine from Sky. We have Patricia Coban from Virgin Media, O2. So we're integrated cable mobile business. We know is exploring a network. And we have Kerry Gilder, the CEO of Colt, to give us the B2B perspective. So I'm hoping we can kind of cover the full spectrum of issues, be it whether you're a network owner, you're a customer, or you're an integrated provider. Earlier today, one of the big themes that's come up repeatedly is the question of consolidation in the UK fibre network and a perception that there are too many fragmented operators to make sustainable returns. And I thought it might be useful to sort of open up by going to Greg, because Greg's built one of the largest independent fibre wholesalers to date, and ask Greg, what level of take-up do you think you need if you're building an alternative network in the UK to make sustainable returns?
Well, thank you, Alex. But I thought you were going to ask me about consolidation, not take-up.
Well, it will move into that question, because I guess you need, one of the features of this market is the retail market is very concentrated.
Correct. Well, first we think getting to sustainable is the journey we're on, and that is we're across 4 million now, so we're the second largest fibre plant in the UK. We're 100% dedicated to wholesale, so the only way we can do that is to have superior products, superior economics, and superior service, because otherwise nobody else would use us. So that's our theme, is just to stay on that. We're currently doing about 1,000 installs a day, 25,000 net adds a month. So we first concentrated on scaling out the build, which is spectacularly done. We're not at the might of Openreach, of course. They're just so much more powerful than us. But from a standing start, we've covered over 4 million, and we're doing over 1 million a year in rollout. So we'll hit our target of 8 million along our journey. We think that anywhere in the 30 to 50% range of penetration really works. Our ecosystem today of the ISPs we have is delivering us a blended average close to 15, but if you look at all of our early cities, they're all close to 30%. So Milton Keynes, we finished it 2 years ago, it's over 32%. Aberdeen, we finished a year ago, it's already over 27%. So cities, once we finish them and then let them just mature, they rise up to 30 really quick. And then we think we can just push that up. Now, the reason we feel confident in that is that the only way we'll exist is by being a better product with superior economics and a better service quality, because we have to compete with Virgin, which is as you hear, fabulously good, strong, super well organized. Same with Openreach, super well organized, and BT has a retail engine that's so powerful. So the only thing we can hold on to is being lean, mean operating machine around those three principles of, superior product, better economics, and a better service level. And if we do that as a pure wholesaler, then we know we can get to our benchmarks, which was number one, which was hitting EBITDA positive, which we did that. We're growing healthily on the EBITDA line now. And the next goal is free cash flow. And of course, that's all dependent on how big we want to be and how we want to go about that. And then that plays into whether we build it all ourselves or we do some acquisitions along the journey. So
that's interesting.
Hopefully.
Now, Clive, if I can just turn that same question to you. Now, clearly you're a very large provider and unlikely to be the active consolidator. But when you look out at the UK market, where do you see the end state in terms of number of networks?
Well, the first thing to say is that what I see when I look out into the UK marketplace is an amazingly vibrant marketplace, whether that be at the retail level or at the wholesale level. It is spectacular to watch the amount of fibre build that's going on here. We are the fastest fibre building nation in Europe, I believe, and I believe that's by a big margin. I think Openreach on its own is now the biggest builder by rate of build in the whole of Europe, and then Greg and Fibre and Virgin and 100 other altnets on top of that. It's just spectacular. I think it's not clear how it will play out. I can tell you how the Openreach story is going to play out. We will next month have a platform of 15 million homes passed, and later this month we'll pass the 5 million customers on the network mark. So we're at 34% take up. I think competition is intense, and I don't see that ending, right? I see appetite amongst many players to keep pushing hard. And perhaps we will see consolidation. We've seen a little of that so far, but we've not seen a lot of it. There are over 100 fibre builders in the UK, and I don't see much evidence that they are consolidating. Just a few examples. I think we have to see how it plays out. What the regulator has done in this market is create conditions where competition is fierce and investment is very large scale, and I think that is an exciting place to be for all of us.
Interesting. So maybe I'll pivot it now back to Amber. You know, Amber is a sort of really critical buyer of wholesale in the market. How do you think about who you wholesale from? Second question is, how many networks can you wholesale from practically, from a technical and customer experience perspective? And how important related to that is nationwide scale in the wholesale proposition?
Okay, thanks. 3 questions in one. Thank you. So at Sky, we have observed a huge amount of increase in data consumption every year, 30%, 40% since 2019. Our customer base is incredibly data hungry, and I think as an industry, there's been a lot of focus on full fibre rollout, which is impressive. Openreach, City Fibre, VMO2, we're about 60% of the UK now who are full fibre or gigafast speed enabled, which is great. However, and I think this is a big however, we're only seeing sort of 1 in 4 actually taking up those products. And I think that's now where the role of a retailer, the role of Sky becomes incredibly important. We need to start driving that take up, and actually Sky's unique. We are one of the biggest broadband providers in the UK, offering the best products at brilliant prices and a brilliant customer service for our customers. But uniquely, we also offer the catalyst for full fibre take up in the home with our full Sky product ecosystem. So Dana this morning talking about Sky Glass, our new streaming TV, and Sky Stream, our new plug-and-play puck. Those products are internet delivery products, and when we think about the connected home of the future, we see a world where there's going to be more and more need on those types of services in the connected home. So we're looking for a wholesale provider, and we're not platform agnostic, network agnostic in that sense, who's going to offer us those reliable services, the faster speeds at really competitive prices. In terms of how many wholesalers, I think that's who knows what the limit is, but it's not an easy process. We need to make sure that the customer experience is first and foremost, and that means perfect integration all the way through so that a customer's experience is totally seamless. To be honest, I don't think they care who their network provider is. We are their internet provider as Sky, so it's up to us to make sure that they're getting that brilliant service across their home, and that connected home that will become increasingly important. Nationwide coverage is an interesting one because obviously my customer base is nationwide, so I'm looking to get as many of my customers onto full fibre to enable that experience as possible. But actually, as I said, I don't think the problem necessarily is around build anymore, it's around take-up. We did an interesting piece of work which we're constantly revisiting, which is actually how many of our customers even know what full fibre or FTTP is, and I'm afraid to say it's less than 50%, and actually of those 50% who actually know what it is and what it will do for them in their home, again, it's less than 50%. So our job right now needs to be around educating, explaining, if you want to have a home where you can be streaming in one room, gaming in the other, working out, and perhaps doing all at the same time, you need full fibre. And actually, once customers understand that value proposition, any concerns fall away, and we see them come. So we're network agnostic, we're customer first, and we're looking for a network provider who will partner with us in that experience.
Just follow up a little bit. How complicated is it getting the APIs in place so you can wholesale off Greg, off Clive? I mean, I understand it's a bit more involved than just a commodity process that you can do with multiple providers.
Yeah, and as I said, I think there are easier ways and harder ways to do that. And you know, at Sky, we're proud to be giving our customers the best experience. You know, Ofcom, every quarter for the last 2 years, we've been the least complained about broadband providers. So yes, it is hard, and it should be hard, because we need to make sure we've thought about every single step of that customer journey.
I can tell you from I mean, Clive and BT have such a different experience because they've had all the service providers, but just in the last 3 years, we've onboarded 40 consumer ISPs, and it's really hard. It's deep integration, and I mean, just case study, it took almost a year to get Vodafone fully integrated. It took 9 months. We're still not finished with TalkTalk. Some of the smaller ones are more agile, and they can integrate right in. But it's to Amber's point, it has to be completely seamless. So the whole, and because we're completely fresh, we get the use of modern IT systems, and there's no legacy, so we bought as state-of-the-art as we could, and we use as much AI as we can throughout. But the seamlessness is one of our wholesale customers needs to be able to buy a line in Inverness, which is one of our cities, and in Plymouth on the same day, and they have the exact same experience. Exact installation SLAs, exact product set, exact feedback into their network onto what's happening when they're not even connected to that. So it's not a task, and I think that's why you see a lot of altnets say they're wholesale, but they don't have any wholesale customers yet. Because it's a really hard, long journey, and it requires a commitment. Like, for instance, our firm, we are just a big IT house, that's it. And all we do is live to integrate in with the wholesalers, because we don't have any retail. So I have to make the wholesale customers succeed on our footprint. Kerry's a customer of ours, Colt's a customer of ours, buying circuits from us. And so our life depends on our IT systems and our APIs, allowing people to get unfettered access to those APIs. And we are pushing the envelope. We're trying to do proactive repairs, meaning we'll send a truck when we see the fault before the customer's even called. But the big service providers aren't set up to handle that. So they backed us off and said, well, wait a second, you're fixing them before the customer's even called. And we're going, I thought that's what you wanted. And they go, yeah, but it's not integrated in our systems. And so you can't do that until we get integrated into the systems. So there's a lot in that whole area. Sorry, I'm a software engineer.
It's good to hear. Maybe pivoting now to Patricia. You know, VMED02 has announced the intention to create a NetCo and open up to wholesale. Can you just share with us your thinking on that strategic move?
Sure. For us, the creation of the NetCo makes total sense from a number of dimensions, and I think that it underpins our fibre strategy and our focus. And I think that it will do a number of things for us. You know, clearly, it will be a clean, scaled entity to enable wholesale opportunities at scale. And I do believe that level of coverage that's nationwide and that scale competition to Clive will be relevant for core customers. But it's not just that. It will be a vehicle for altnet consolidation as appropriate. I believe that Mike made a reference to it earlier today. And then as we move forward, it will also give us optionality for financing. So that is in a nutshell, the approach to NetCo. We announced earlier this year, we're committed to the timelines, and work is really well progressed. If I stand back, I think that it just underpins our commitment to scale in fibre. And if I stand back, I'll see at the end of the decade, across NetCo and the build that we are preparing for next fibre, 21 to 23 million premises passed, offering a nationwide competitor to BT Openreach for the first time in UK history, and in the context of this vibrant, growing, competitive market, that has to be a good thing for customers like Kerry, like Amber.
And do you worry that opening up VMED will expose you to some cannibalization of your retail revenues?
No, it doesn't. I think, I'm confident that we have a breadth of brands, of offers that can cover different segments in the market, much as we do in mobile, and therefore that wholesale opportunity will be accretive to our overall revenue. And remember, we've spoken about wholesale opportunities, but that's incremental revenue for us on top of our currently circa 35% penetration on our network. So we'll explore those opportunities only when they make sense.
Maybe a follow-up. One of the fundamental differences is you are principally today a coax network. And so your first step to wholesale is wholesaling over cable. Can you just talk us through that? Because that's still not so widespread yet as a proposition in the market.
Yeah, and I think there, Alex, if I stand back in terms of your opening statements and the scales, I think we are currently the largest gigabit network in the UK. And we were the first to offer gigabit speeds to our customers across our full footprint, which is 17.2 million as at the end of Q1 this year. And we're really happy with the quality of the network and what it enables for our customers and could enable for others. It more than meets their needs today. And what we're doing through our fiber strategy, upgrade and expansion through Next Fibre, is to make sure that we're in an equally really great place in the future. So that's how we look at the opportunities of wholesaling in our network and the services that it provides. I think that we'll see how the market evolves.
Perfect. Kerry, turning to you, you're a bit unique in this panel because you're principally a B2B provider, pan-European. Can you just talk us through the acquisition of Lumen, the thinking there? And actually, then the next bit I'd like to unpick is we're debating here network, asset-heavy, asset-light approaches. Do you need to be asset-heavy in the B2B market, or can you do it from an asset-light perspective?
Yeah, happy to take both of those. So the first question is around the Lumen Europe, Middle East, Africa acquisition. Colt has been around for over 31 years. We were the City of London Telecom is how we started, and we've actually had the same investor the entire time. So I think we're in a very unique position to ensure when consolidation happens, we are the consolidator, we're not the one that gets consolidated. And that was very important to my investor, and it was very important to us as a not only pan-European business, but as a global business. We have significant assets in network, fiber assets in Japan. We have assets in Southeast Asia. We have a transit network in the United States. So as a global provider, we felt that our home market, which was the continent of Europe, was what we had to secure. And as that consolidation was very obvious to us, and a lot of pan-European networks are either up for sale or will be up for sale in the course of the next couple of years, we wanted to maintain our lead position. And that's exactly what we did. If you take the Colt infrastructure on a pan-European base, and you add the Lumen EMEA fiber asset, which we did, we will hold the 60% of the pan-European asset base. And so if you combined all the altnets that are also pan-European, they still won't make up the volume of fiber that we have across that entire infrastructure. So it was really around assurance of our leadership position as a pan-European player. It was assurance of us as a global operator. What we started to see was many operators, especially the incumbent operators, they started picking flags, is what I call it. They started moving to their local territories. And we saw it here a little bit with BT. We've seen it in the US with AT&T wavering as to whether they're going to stay in the global market, come out of the global market. You're seeing it with a lot of the incumbent operators. And what we decided is that that offers us an opportunity to maintain our global position and kind of bet big on being that global aggregator. So that's where we were on that. The second question that you had was around asset light, asset heavy, can you actually compete? What we've seen in the B2B business on a global basis is that it is extremely difficult to participate if you do not own assets. And that's because the commoditization of pricing has absolutely happened. And as that has happened, if you don't own that full value chain, then it makes it very, very difficult to hit your free cash flow, to ensure your EBITDA, is continuing to grow. And so we've seen, the likes of companies like Packet Fabric and Megaport and some of these other companies that have been asset light really struggle. And they're continuing to struggle, and I think that's going to continue to happen because all of us that are asset owners are starting to move up the OSI stack into that software level, and we can build the asset-light services over our asset and provide a better service because we have control of it, just like Greg was saying earlier.
Yeah, the difficulty thing I see is that you don't want too many duplicated networks.
Nope.
Because otherwise you double up the capex and you reduce the load you can put on it, therefore the returns. Sky's an example of a customer base that seems to work very well as a customer buying network access off these providers. Is there anything inherent in the B2B market that means that you have to own the network in order to bundle security products, other products? Because otherwise, surely you could have B2B providers that don't need to have that asset heavy. Because one of the challenges of the sector is just the overcapitalization, the duplication of networks.
I think I think the B2C market and the B2B market are very different when it comes to the customer experience. And when I'm dealing with a customer who is a hospital, when I'm dealing with a customer that is, needs emergency services, when I'm dealing with a global financial institution, their requirements on us are very different from a consumer if they don't have their TV for, or their internet service for an hour or two. Yeah, they're mad, don't get me wrong, but you're not worrying about lives being saved or, the financial institutions going down and the stock market stopping. So I think it is a different environment. The customer experience requirements are much higher, and that's where we believe we have significant differentiation. And you can have more control of your customer experience if you own asset.
Alex, I would say the trick is at the service layer above the infrastructure. You can have common infrastructure serving B2C and B2B markets, but you need to differentiate your service proposition.
Yeah.
So, for example, we have incredibly fast fixed times on our point-to-point Ethernet products, but they leverage the same physical fiber network that we use to serve consumer customers by the million.
Just staying on this point of how much capital and capitalization you have in the networks, I want to sort of unpick this concept of the survivor's curse. Here we have strong operators, but there are smaller altnets that have put capital into the ground. So they put £1 billion into the ground, and they don't load those networks, and they go bust. And a financial investor comes along and buys them at, for my example, £100 million. They can price at a huge discount to the invested capital base and disrupt the market. That's always been a fear from a lot of credit investors. Do you see that as a realistic threat of something could play out with some of the smaller platforms in the UK?
I'm happy to pick up.
Yeah.
I think you're right. Somebody could pick up an altnet at 10 cents, 50 cents on the dollar, and then try to drive what the name of the game is right now. And I think that Greg alluded to it, which is driving penetration. And I think that if I look at what driving penetration, customer take-up, Amber has alluded to it. If I think of Virgin Media O2, clearly we are already in a very competitive market. There's different price points, but we have a suite of brands and a set of products and services, which is not just the broadband. You have TV, you have mobile, you have the best rewards and perks platform in the market in priority, which in short means that what you get from Virgin O2 is not replicable by a small outlet. They may drive a different pricing, but it's not comparable of the scale, the reliability. And therefore, I think that in the current market, it is competitive. We'll see consolidation. We'll see movements in the market. I don't want to predict, but I don't see the market going widespread irrational. I don't know what your take is.
Well, consolidation for us I mean, we would like that. We think that you have to look at what's really good for the UK and what has come about. Competition has entered into this space, and it has unleashed Openreach with 15 billion CapEx program, or 20 and 10 in Virgin. The benefit is massively for the consumers, right, and the UK PLC, because the underpinning of a world-class digital infrastructure for the UK is sacrosanct. If you want growth in any of your industries, a world-class digital infrastructure is what you need. Competition has driven that and made this an incredibly vibrant spot. So the consolidation of the altnets into a large third network is probably the best outcome for the UK in general. We could consolidate into the NetCo of Virgin if Virgin wants to do that, or if their NetCo is there to take City Fibre away out of the independence. But what would be best for the UK is, and it's obviously been demonstrated because we're here at this panel and we're talking about having the fastest rollout in all of Europe, the European envy of how you got all that private investment. We've got half the country covered in fibre, and we have the fastest speeds at the lowest price. So the benefit to UK PLC has been overwhelmingly positive, and that is from the spark of competition. So what would be beautiful if you were to be looking out in the future would be that a third network arises out of the altnets, which is of sufficient scale, maybe 10, 12, 14 million, that then has sustainable competition for Openreach and Virgin for the long term. Now you have 3 network operators competing, driving down price and driving up innovation. That's what's happening. That's where it's going. I don't see a world where there's small little altnets that just go away, because we've done one acquisition. We are talking with all of the altnets. We have never overbuilt an altnet, nor has an altnet ever overbuilt us. So we're all sequenced because we had rational capital. No investor in me would let me overbuild an altnet, and no altnet would really overbuild us. So we're all naturally sequenced together, more or less. And it's just a matter of capital formation and capital value that stops us from combining. But I think it'll be inevitable. But I don't think they'll go bust, and then it'll be picking up the ashes. Now, the difficulty with the whole consolidation play and why it's slow is the capital problem. There's people that have invested at certain rates, and you can't quite match that formula for it. The second problem with the consolidation, and City Fibre was born out of consolidation. We did eight acquisitions or so in total now, but is that the network architectures are different. And so every acquisition that we look at, we have to look at, okay, what did they put in the ground? But it's a different splitter ratio. It's a different, as Clive knows, it can be a spaghetti out there. And trying to put that spaghetti together can take you as long as just building it yourself. So I think consolidation is inevitable, but how it sorts itself out is probably in a logical manner.
Yeah. Quick question, because I want to go to the floor for some.
I would add to Greg's point. I think you're much better off with a common architecture, common set of components, common set of processes in build and in provisioning and in repair. You start pulling things together. You have to face into all those differences in architecture, componentry, processes, and that's a big job. That's a big job. So at Openreach, we talk about this this curse that you've referenced, and our answer to that is to look to innovate in an engineering sense to reduce our cost to build, raise our quality of build at the same time, and as it were, hedge against the survivor's curse by being the leanest, meanest builder of networks in the UK.
Yeah, and I think that if I may, just to build, because I think that we're saying a similar thing, Greg, which is consolidation is inevitable and necessary, and it can drive good outcomes, but it would not be in a survivor's curse dynamic, and it can be a win-win. Like if I think, for example, we acquired Up back end of last year on behalf of Next Fibre. It was a high-quality build, because there's very different quality of build out there. High quality build, strong team, with a complementary footprint to
Listen, look, I'm super reassured we'll survive and the survivor's curse won't prevail. I do want to use the last couple of minutes we got to take a couple of questions from the floor. So it's quite hard to see out here, but can we get anyone to put a question to this panel?
There's one over here.
Straight out in front. Yeah.
Just giving you your comments a second ago about the quality problem in terms of buying assets. I wonder if you could talk about any other, maybe just Greg and Patricia, about the other balances you have to make in terms of thinking about buy versus build, because there's going to be a lot of opportunity to buy networks rather than building them. So how much of a balance between buy and build do you see going forward for both of your businesses?
Yeah, see, they wanted to hear about my app acquisition, Alex. You know, you cut me off.
Sorry.
I think that is some of the parameters that we talked about. It's the quality of the build. There's clearly, you know, value in the quality of the build and the plant, the strength of the team, and then the complementarity of footprint. And then clearly, as we move, you know, over the coming months, years in the market, understanding what the right opportunity is that economically will make sense in that alternative buy versus build for players like Virgin Media 2, whose commitment to kind of large-scale fiber is there through the setup of Netco and Nexfibre.
I'll add just one to that. I know you didn't ask me, but you know, there's a big elephant in the room that's called debt, and I think that's something that you have to consider as you're going into this. You know, what is the capital investment that has been made? What is the debt profile of that particular entity? And is there a way to actually get out of that? I mean, at Colt, we have no debt. We purchased Lumen EMEA for $1.8 billion in November. We turned it into equity and we have no debt. But we're, I would say, a unicorn in the industry for having that profile. And I think that's a critical, you know, element that you have to look at on that build to buy decision.
Excellent. Well, look, can you thank the panel on my behalf? It was very, very constructive. Thank you very much, everybody.